The stock once traded above $20, but today it's hovering near $5. Is this creating a once-in-a-decade buying opportunity? Or is Wall Street warning investors about something much bigger? In this video, we'll break down the fundamentals, financials, and technical outlook to explain exactly why Lwlg continues to struggle. The biggest issue isn't the technology, it's the business. Lightwave Logic generated only about $237,000 in annual revenue. Yet the company still carries a market capitalization close to $900 million. That means investors are paying an enormous premium for future expectations rather than current business performance. Let's talk profitability. The company reported net loss, negative $20.3 million. EPS, negative 0.16. Simply put, Lightwave Logic is still burning cash. Without meaningful revenue growth, those losses become increasingly difficult for investors to ignore. For years, investors have been waiting for commercial adoption. Lightwave Logic's electro-optic polymer technology has attracted attention, but large-scale commercial revenue still hasn't arrived. Every quarter without major customer wins increases market frustration, and that's one of the biggest reasons the stock continues trending lower. Here's another concern. When a company has very little revenue but a very large valuation, the market demands rapid execution. If management fails to deliver commercial contracts, the valuation can compress dramatically. That's exactly what we've been seeing over the past year. Another risk investors should watch carefully: future share dilution. Because the company is still losing money, it may eventually need to raise additional capital. If new shares are issued, existing shareholders own a smaller percentage of the company. That's typically negative for the stock price. Now let's look at the chart. The long-term trend remains bearish. Key support sits around $5.50. If that level fails, the next downside area could be between $4.50 and $5. On the upside, the stock first needs to reclaim $7.50. After that, breaking above $10 would be the first major sign that buyers are regaining control. Until then, the bears remain in charge. Despite all the risks, there is still a bullish scenario. If Lightwave Logic announces major commercial licensing agreements, large semiconductor partnerships, rapid revenue growth, or meaningful product commercialization, investor sentiment could change very quickly, because this remains a highly speculative growth story. Here's the bottom line. Lightwave Logic has exciting technology, but technology alone doesn't create shareholder value. The company needs real customers, real revenue, and eventually, real profits. Until those milestones arrive, investors should expect continued volatility. This remains a high-risk, high-reward stock. What do you think? Will Lightwave Logic become the next photonics success story, or is more downside still ahead? Let me know your thoughts in the comments. If you enjoyed this analysis, don't forget to like, subscribe, and turn on notifications for more in-depth stock market research. Thanks for watching.